So this is US 30 analysis for Tuesday 23rd of January. Now let's have a look at the prices and where they may likely go. So as we can see here, we've had prices come down towards the 26,000 level. Well, this was last week. So we've had prices come down towards that 26,000 level. We have caught a bit of a bid, as indicated by this very strong bullish candle closing near its high. We have seen further upside continuation. We've had a few pullbacks here and there, but overall we've seen the market head upwards. Now we've got this level marked out here in around this 26,268, around 26,268. So we'll see our prices reacting around 26,268. We may not find resistance there. If we do see the overall trend here persist, we do have to be aware of possibly we might go beyond this 26,300. So we'll see our prices react in around the 26,400 and 26,500. Again, we're looking to see if we do see sell side momentum come into the market. But overall, this market is in a very strong uptrend. So it is difficult to look at counter trend trades due to the strength of this market overall. So there does seem to be a very strong long bias. Now, if we do find resistance either at this 26,268, 2300, 400, or 500, we are looking for prices to possibly head downwards, target levels below, so possibly 268. And if we do break down from 268, we are looking to see our prices reacting around their previous swing high of 26,165, 26,086, and the 26,000 round number. Again, that's if we do find resistance, we do see sell side momentum coming to the market. Yeah, I would anticipate 26,165 and 26,000 being more important than, say, 26,086. If we do break down from 26,000, we are looking for price to head down towards our 25,952, and beyond which we're looking for 25,879. Can't anticipate prices moving all the way down to 25,708, but overall the trend does appear to be to the upside. Now, on the US oil, we've mentioned levels to the upside and the downside. Now, interestingly, prices, this market is developing into a, let's just get a scale on here correct. What we are seeing here is a pretty much near vertical move. Now, we've had several weeks of, hold on a second here. Let's get the drawings of the charts. So we have here several weeks of very strong bullish momentum. We've pulled away from these moving averages here. I think it's a 20-period moving average just marked out here in red. Now, interestingly enough, and that's on the weekly time frame. Now, on the monthly time frame, which is the one I'm most interested in, is this very candle that's developing here in January. Now, this candle, as you can see, is pretty much larger than most of the candles going all the way back to 2010 or so, with the exception possibly being this bearish candle here. Overall, this is a very large candle, north of 1,000 points, well north of 1,000 points here on the US 30. Let's just see. We opened at wow. Let's just see where we opened. We opened at 24,711, and we're currently at 26,235. So yeah, well over even 13, about 1,500 pips or so. Yeah, about 1,500 pips. We're about 1,500 points. Sorry, using a forex terminology. So we've got over 1,300 points here on the Dow. Now, with the fact that we are in an uptrend, the reason I'm pointing this out, the fact that we're in an uptrend and we are seeing a very large candle in that trend, usually I think usually these things turn out to be blow off tops. Now, how I normally determine whether somebody think is likely to go counter trend, especially when it's in a very strong trend, is I will look at the ATR really. So normal ATR, we're looking at about 1,000 points here on the US 30 over a month, and this is actually larger than that by about, say, 30%. Again, it's a great candidate. Usually when we have candles which are equal to or larger than the ATR, they're usually blow off candles, especially if they do come at some point after a very strong trend. So we can't say this is the end of a trend at present, but the fact that we've had a very strong trend, persistent trend to the upside, and we're having this very large push, is probably one last move by the bulls, after which they'll become exhausted, they'll possibly take profits. Bears will enter the market, seeing it as an opportunity to sell this market. So if we do continue our upside momentum, which I'm hoping we do, next month, are possibly looking for counter trend trades, as I would anticipate the bulls being somewhat exhausted, and bears may look at this as being an opportunity to enter the market. And we may see some retracement here on the US 30. But again, that's if we continue our upside momentum and we have a very strong close to the month, well north of 1,000 points or so. But I'll be very cautious in going counter trend, because overall this market has been a very bullish trend since November 2016. And yeah, I think that pretty much just wraps up everything in regards to the US 30. What I anticipate what's going to likely happen going forward. Now, let's just see here on this monthly chart. We did have a pullback. Our last major pullback, well, it wasn't a major pullback. The last bearish month posted was actually in 990, 968. Our last bear was actually posted March 2017. So again, in around February, March, possibly the pullback, especially in light of this candle being larger than the ATR. This candle being larger than the ATR in a very strong trend. So possibly blow off top, then we're going to likely see a retracement. That's what I'm expecting. But we're still a couple of days away from the end of the month, and there is quite a lot that could happen before then. But yep, those are my views on the US 30. And yeah, thanks for watching.